my first stream, it might be a little janky. I apologize for that. So welcome. I think we've got a few people watching, 17 viewers. So today, I don't want to spend too long on this. I don't want to draw it out too much. But there's been some interest in the topic of price earnings ratios, what they are, what they mean. They're a fairly simple fundamental measure. It's pretty easy to get started with them. They actually are quite rich in the information that they can give you. And a lot of people know that. I think a lot of people consider them old school and perhaps irrelevant. So price earnings ratio, in effect, it's very simple. It is the price per stock. So if I jump out to Baidu, the price per stock is $132, and it is the earnings part is the earnings per share. So how much money that particular company is making in terms of profit per share. So for Baidu, this is 6.8 at the moment. So it's simply just one divided by the other. And what it gives you is an easy way to understand how expensive or cheap or fairly valued a stock is by comparing these two things. Prices can vary, profitability can vary, but the ratio tends to be more or less the same unless you're in a super volatile company. And in fact, over a long enough timeline, the PE ratio, whether it goes up or down, should return to the historical average. Because it does rely on earnings. Any companies that have negative earnings, it's not going to work. And also, I wouldn't look at companies that have a very short history of earnings because I don't think that the average has really settled at that point in time. So the Investopedia article on the PE ratio is pretty good. I would say don't be afraid to read through it, poke around in a few examples. It really is as simple as the price per share over the profitability per share. So another piece of information I would consider when trying to learn about PE ratios is Peter Lynch has some really good quotes and some good information about price earning ratios. I've known about PE ratios for probably 15 years, but I would say that I only really understood them between 5 and 10 years ago. And what Peter Lynch does is, if you read a few of the extracts from his book One Up on Wall Street, is he gives you ways of explaining the PE ratio with slightly different views on what it is and what it means and how to use it. And some of these really help it hit home if you're looking to understand the concept. I'll share that link too. So the thing to consider though is that some companies are incredibly high growth. So Shopify doesn't have, I don't think they've been profitable yet. Tesla's only had a few profitable quarters. So they're not good examples. But if you're able to find a company that has high growth and has a decent history of earnings, then the price earnings ratio might be skewed and difficult to understand. And that's when you might want to consider also looking at the PEG ratio, which is the PE ratio but taking growth into consideration. So I won't go into that now, but it's something that you can read up on. It's not, if you understand PE ratios, the PEG ratios, it's not that hard to understand either. All right, so let's have a look at some examples. So I've picked out Baidu. Baidu, for those that don't know, is a search engine. It has a number of other different bits and pieces to the business model, but it's usually known as the Google of China. I'm looking at the weekly chart here because I wanted to look at a bit of a longer time frame. So what we can see is that roughly when the inflation worries and the concerns about the trade war began, the stock price of Baidu started to plummet. And it tanked quite hard. We've got an all-time high here, or recent all-time high of $272, and the stock is slightly over well, just about half that price at the moment. Now, when looking at a graph like this, it's not enough that a company has had a severe drop from an all-time high. The company might be in bad shape and you might not want to invest even though it's way off the all-time high. But I know that Baidu is a big company. They're well known. They're a behemoth in the East. So I start becoming a little bit interested when I see this kind of thing happening. So then I think, what can I have a look at next that's going to tell me whether the price of this is fair, or if it's cheap or expensive. And probably the next thing I would check is the PE ratio, not only of this stock, but of others that are like this business. And I would look to find out a bit more about the historical PE for Baidu. So what we can see here, eToro, I don't know how much people use the stats tab, but eToro has over the past 2 years put a lot of effort into this, and there's a lot of good information in here now. So you can see that they've got a PE ratio of 19.2. The first thing I have to point out is that the PE ratio on different websites will vary, and it's not because the PE ratio actually is different between those sites. It's because there are different ways to report the PE ratio. You can report the PE ratio for that day, that month, that quarter, the trailing 12 months. So there'll be some variation, but the base level data should all be the same no matter where you look, even if the number that you're looking at on a particular website is a little bit different. So an example of this is, I'll come back to this, but the PE ratio here is being reported as 14.76, which is quite different, but that's because this data is only running to the last reporting quarter for Baidu. I will come back to that. So I'm interested in the stock. I'm looking at the PE ratio. It's about 20, right? So the easiest thing for me to do is then to take a look at Google, because Google is the Google of the Western world. So here we can see that the PE ratio for Google is 30. It's 50% higher. And now my interest is even more piqued. So Baidu has had a stock price that's been dropped for a year and a half or so. PE ratio is 50% that of Alphabet. Alphabet stock price has been going up. So that kind of makes sense. Alphabet is a fairly expensive stock because the stock price has been rising through the same period, whilst it's been making earnings. All right, so I now have compared the PE ratio between the two businesses. Baidu is potentially looking cheaper. Now we need to have a look into why. Why would Baidu be cheaper? Is it because the business has been damaged? Is there something fundamentally wrong with the company? Or is it because the market has missed something? Has the stock price been hammered by fears over inflation, the Chinese-US trade war, and the price now is actually much cheaper and the market has not yet realized how cheap the stock is? What you're looking for is you want to get in at a price ahead of the rest of the market before they realize that something is undervalued. Because when they get in, the price will rise, and then that's when you start making money. All right, so I've got my one data point. So how's the company looking overall? Well, they're making a lot of money. They're making a decent amount of revenue. I can jump down to this view, and I'm going to change to the annual view. So I can see that over the past few years, Baidu's income, the number of stuff they sell, has increased quite nicely. So they're in 2008, the fiscal year 2018, they made $15 billion. I can also see they were making a decent amount of profits. Something happened, it dropped off, and then they've slowly been climbing their profitability at a pretty good clip once again. Something to note is that the numbers that you see reported here will also vary slightly depending on which tool you use. For example, if I jump out to Yahoo and I'm looking at Baidu, you can see that the graphs are more or less the same. So big 2015, lower profitability, revenue and earnings increasing nicely. The numbers that eToro is using in terms of revenue and profitability are slightly different from what is available on Yahoo Finance. And that's because there are different ways to slice and dice revenue and earnings. You can take them before tax, you can take them before expenses, you can take them after tax and expenses and depreciation and amortization. The numbers are huge. The important thing to note is that you will see that the graphs will more or less be the same between the different tools. All right, so now I know that Baidu has had the share price drop for a while. The earnings are excellent. This is a highly profitable company. The earnings are growing. This is a company that's growing nicely. We know that the PE ratio is good compared to a comparable company, Alphabet. And if we now look at the historical PE ratio for Baidu, we can see it's a little bit of a tricky graph because Baidu is a little bit volatile in terms of PE ratios. So, but we can see that overall for the past 5 years, the average is, definitely going to be higher than the points that the current PE ratio or the PE ratio for the last reporting period. And I believe the current PE is even lower than the historical average now. So what this tells me is that Baidu is lower than its average PE, which means that at the current price, it is more attractive than it would usually be. And so these pieces of information together tell me that Baidu is probably a pretty good buy. And you may have noticed that I've picked up a little bit of Baidu stock in the past week or two. Because I think that this is a fantastic opportunity. Now, this doesn't mean that you are going to make a hell of a lot of money in a very short amount of time. What it does mean is that you are probably going to make a good deal of cash if you're patient and are just holding onto the stock, because the market will at some point realize that this is undervalued, people will pile in, and the stock price will go up. So effectively, that's it for PE ratios. What I did want to raise very quickly is that you need to, when comparing the PE ratio between different companies, you need to pick the right companies, the right industries. So for example, Amazon has an absolutely insane PE ratio of 93. And I think this is higher than their average. I think the average is about 70, by the way. But comparing Amazon to Baidu is not going to tell you that Baidu is relatively cheap for its particular industry, because they are fairly different businesses. So you need to compare apples with apples as far as possible. No two companies are exactly alike. You need to find the closest equivalents if you're going to compare the PE ratios for different businesses. And just as a last point, so last night I was at an eToro event and I spoke about a few different stocks. I spoke about Baidu. I also spoke about the NASDAQ. So PE ratios can be applied to individual stocks. They can be applied to lots of different asset classes, actually, including indexes. So you can pull them up for the S&P 500, as well as the NASDAQ. Note this is the NASDAQ and not the NASDAQ 100, but on eToro we trade the NASDAQ 100, but the values will be different here, but the trends should be the same. So what we can see, and what we all know for those of us that trade the NASDAQ, is that the price of the NASDAQ has been going up. And if you look at the PE ratio, it's not looking awful. It's not looking so bad, actually. You can see that going into 2008, it was pushing around the 28, 29, maybe 30 mark. And then there was the obvious sell-off and the financial crisis. The PE ratio was down to 5. So, I mean, you can see at these levels that you probably would have been considering getting in. And then the PE ratio has risen. I think the NASDAQ historical PE ratio is, I think it's around the 20 mark, maybe 18, 20. So the NASDAQ itself has been quite expensive through 2019, but isn't too far off of the average at the moment. So I do think that we are due a consolidation, but I'm actually looking at this, and this, you should look at more measures than the PE ratio, but this one measure is is showing us that maybe the Nasdaq isn't as expensive as we thought. The stock price is going up, but the net earnings per share are pretty good too. All right, cool. Thank you. That's about it. I'm going to try to do a session like this every week, probably on a Friday. If you have anything that you would like me to talk about, please let me know in the chat. All right, cheers.